This is the Asia Trade. I'm Shery in Seoul for our special coverage of the Bank of Korea rate decision.
I'm Haidi, Stroud-Watts in Sydney. The top stories this hour. Asian stocks are set to follow Wall Street higher, dovish Fed minutes and a big downward revision of US payrolls, reinforcing bets on a rate cut next month. Investors will be watching the Bank of Korea decision for any pivot signals, with Governor Rhee's team widely expected to stay on hold today. Plus, we speak exclusively to Xiaomi CFO Alain Lam about going where even Apple failed as they absorb losses from a foray into EVs. Let's get you straight to the data. We do have PMI numbers out of Australia just crossing the Bloomberg, and actually a little bit better when it comes to the improvement that we see in these preliminary numbers, I should say, for August. 51.4 is where we're seeing the composite reading there, really being lifted out of contraction territory of 49.9, the previous reading. Manufacturing split out is still showing weakness, albeit some improvement, 48.7 there. And PMI services actually seeing quite a jump, 52.2 from just over 50 in the previous reading. But of course, it is all down to central banks. And as we continue to watch for any kind of signs of less hawkishness from the RBA, we're seeing the potential for at least signalling of a pivot from the Bank of Korea today, Shery.
Yeah, we're watching that decision very closely because it's all about whether or not we get a dissenter. Right now, most economists expecting the Bank of Korea to hold rates steady at 3.5% for the 13th consecutive meeting. But of course, it's just all about real estate prices here in South Korea. Apartment prices have been soaring here in Seoul. Board members very concerned about that. Will we get a dissenter? We didn't in last month's policy decision. But of course, we're watching, Heidi, the 3-month forward guidance. Will they be signaling a cut?
And of course, Shery, so much of this depends on what we hear from the Fed as well, right? As some of that revision in the payrolls numbers, as well as the dovishness in those minutes out overnight, really reinforcing these bets that we will see a rate cut and the start of that easing cycle in the next month. Take a look at how US futures are trading at the moment. We are seeing S&P futures looking pretty flat at the minute. This is, of course, we continue to watch for really signs of caution in these equity markets. We did see that sort of rally looking like it will be extended into the Asian session on these further signs that the Fed will cut rates next month. And that also, of course, lifted Wall Street. Nasdaq futures up by just about 0.1%. We also saw that outperformance when it comes to shorter-term treasuries as well, as 2-year yields falling almost 10 basis points, pairing some of that move. We're also seeing a little bit more balance when it comes to oil markets at the moment, with crude at the moment holding steady, but still pretty close to those January lows. That was more of a algorithmic-led sell-off that we saw. Take a look at how we're setting up for Asia, and unsurprisingly, we're following the lead that we saw on Wall Street. The rally expected to continue, with Sydney futures up by about 0.4%. We're seeing some buoyancy out of Japan, as well as futures trading in Hong Kong as well. That gauge of US-listed Chinese shares up by almost 2.5%. So we could see that pass through A50 China futures up by about 0.3% at the moment, Shery. But of course, it is really the action as to where you are in Seoul today.
Yeah, because the BOK right now widely expected to extend its policy holding pattern. This would be the longest hold since 2018. Our Korea economy editor Sam Kim joins us here with the latest. And Sam, thanks so much for joining us outside of the BOK so early in the morning. It's all about what happens next, right?
That's right. I mean, most of the economists that we've spoken to basically say, hey, it's going to be a hold this time. But let's wait for October, because everybody expects there's likely to be a cut coming in October, given that, the Bank of Canada, the European Central Bank, and the Fed, they're going to cut very likely in September. So I think the BOK is going to very much follow suit with the other central banks, given that inflation has been slowing down so far in Korea as well. But I guess the question is, will the property market, the housing market prices go down?
Every time I come to South Korea, the property market is a perennial issue. What's going on? Because I thought a few years back, it was actually down.
That's right. I mean, a couple of years ago, we had a very steep correction in the market. Everybody just went berserk, thinking that it's just going to continue to go down. What happened with that was, because South Koreans hold such an overwhelming share of their wealth in real estate, and their loans are mostly on floating rates, meaning that if the BOK changes rate, their interest expenses will go up very much. So there was a lot of fear, but then the government stepped in with a lot of rescue efforts, funds for developers, and the Bank of Korea had to slow down its tightening pace. And eventually it's come to a halt. Now consumers are thinking, hey, it feels like we're coping with the elevated interest rates.
So they're going out buying apartments at this point. Here in Seoul, we see the prices are so elevated. But at the same time, I guess it's also a matter of how strong the economy is, right? What are we getting in terms of signals about the health of the broader economy to allow the BOK to actually move?
Well, there's been an export rally for the past year, and with the semiconductors doing so well, the Korean economy is getting sort of the financial juice from the exports right now, which means it's going to eventually trickle down to consumers. And the consumers are feeling more confident, and they're feeling that the BOK is going to cut interest rates eventually. So you have this combination of pretty good wages coming in, and the interest expense is going down, and there's a bit of a dearth of homes right now. People are thinking there's going to be a supply shortage. So you combine all those things, and you're expecting the housing market price to go up.
Our Korea economy editor Sam Kim there with Shery in Seoul as we await for that Bank of Korea decision. Well, sticking with central banks, the minutes of the Fed's July meeting show several policymakers acknowledging the plausible case for cutting rates, with some seeing risks of a more serious downturn in the job market. Bloomberg's global economics correspondent Enda Karan joins us now for more. So, Enda, what sort of jumped out at you? Let's start off with the minutes first in terms of what we can glean and how that really sets up market expectations for next month.
It was a very dovish set of minutes, Heidi, probably more dovish than the press conference that accompanied the decision at the time. The minutes today basically made it clear, like you said, several of the policy members actually thought about cutting when they did meet. They've also shifted their considerations now. They're quite concerned where the jobs market is going, more so than where inflation was per se. So they seem more confident on that front. And of course, there's a line in there making the point is that if the data carries on along as they expect, the current trajectory, that being inflation continuing to slow down, but the jobs market sort of continuing to soften, then they will look to maybe ease in September. So I'd say it was a pretty dovish read. It doesn't necessarily cement what they're going to do in September, of course. It does lean towards a cut at the very least, but the real signal may come on Friday when we have Fed Chairman Jerome Powell speaking at Jackson Hole. That will give a very up-to-date state of play for the Fed thinking, in particular when it comes to the jobs market, given the revisions that we had in the data today.
Yeah, that marked down by the most since 2009, but that was almost overshadowed by the messiness of these banks getting the data while it had been delayed. What do we know?
Yep, essentially what happened was this is an annual revision. It had been anticipated. In fact, the scale of the revision itself wasn't altogether a shock, given economists were expecting maybe up to 1 million. It impacted mostly half. It was the white-collar sector, then the rest being like leisure sector, retail and the rest. But nonetheless, a big write-down, 816,000, speaking to the idea that maybe the jobs market in the US is softer than expected after all, or softening faster than people thought. These numbers were due to come out this morning at 10 a.m. pre-scheduled, pre-arranged. It's all very transparent, but it took maybe the best part of half an hour for those numbers to come out officially. But in the meantime, banks and Wall Street were calling the BLS, the Statistics Bureau, and asking what's going on with the numbers and what are they, and they were getting the numbers confirmed over the telephone, and hence you have that sort of confused picture today in terms of how the information dribbled out. So plenty of questions to be asked there of the BLS in terms of how that happened and what sort of process and checks were in place. But the end result is that it's a big headline downward revision to the labour market. It underscores the idea that the jobs market may be softer than expected. And of course, all of that's feeding into Fed Chairman's speech, Jerome Powell's speech on Friday, ahead of that all-important Fed meeting next month.
A global economy reporter, Enda Karan, there with the latest. And turning to politics now, US Democrats are preparing to formally nominate Minnesota Governor Tim Walz for vice president on day 3 of their national convention in Chicago. Our political news director for Bloomberg TV and radio, Jody Schneider, joins us now from the event. And Jody, it has been such a buoyant mood so far, and of course coming off the speeches from the Obamas. What are we expecting to hear and see today?
Yeah, it was really an electric night last night in that arena, Heidi, where the Obamas came out and gave both a very critical speech of former President Trump, Michelle Obama did that. And then the former president, Barack Obama, came out and was critical, but also tempered it with hope about the future. Tonight, we will hear from Tim Walz, who many people don't know that well. Since he was named a week and a half ago, he's gotten a lot of attention, named as Kamala Harris's running mate. But before that, they really didn't know him. He'd been a congressman from Minnesota, but before that, and now governor, of course, but before that, he was a high school teacher and a football coach. Grew up in Nebraska, moved to Minnesota. In Minnesota, represented a relatively small community based in Mankato. So this will be a chance for him to show who he is, what his values are, and why people should put their trust in him for vice president. And then, of course, tomorrow night, we will hear from the presidential nominee herself, Kamala Harris. Tonight, we'll also hear from Amy Klobuchar. Will be introducing Governor Walz, and we will be also hearing from a number of representatives, mayors, and some governors. So it's kind of up and coming night, they often call it. And we'll hear from Governor Josh Shapiro. We will hear from Pete Buttigieg, who's a former mayor and the transportation secretary. And we'll hear from Governor Wes Moore of Maryland, another someone viewed as an up-and-comer in the Democratic Party.
In the meantime, of course, part of the focus on the Obama speeches was really on the former President Trump, right? Trump says it's hard to talk policy, as his allies are urging him to do, with the Obamas attacking him. In this sense, did the speeches work?
Well, I think they worked in terms of certainly motivating the crowd there. The crowd was very, as I say, it was electric. It seemed to get under the former president's skin a little bit. Today he was on the campaign trail in North Carolina and saying that he wanted to focus on policy, but the Obamas were allowed to be mean to him. So, again, it's an interesting situation. The former president is campaigning quite a bit this week, which the nominee of the party who's not having their convention doesn't usually do. But Donald Trump has been out and about. And again, today he was in North Carolina, where he's been 3 times in the past few weeks. But that's a state he must win, a battleground state he needs to win, just like Kamala Harris needs to win Pennsylvania to win this election.
Political news director for Bloomberg TV and Radio, Jody Schneider, there in Chicago, as we look ahead to the highlight, of course, the formal nomination of Tim Walz for the vice president candidacy. Coming up next on the Asia Trade, AIA Group CFO Garth Jones is along with us exclusively to talk about the insurer's new business value, those numbers, the growth, they're exceeding expectations. We'll also be speaking exclusively with the Xiaomi CFO Alain Lam for the outlook on smartphones and EVs. HKEX CEO Bonnie Chan is also coming on as well to tell us how Hong Kong is benefiting from investors diversifying their holdings from mainland China. This is Bloomberg. Well, AIA reported a 21% jump in first half new business value to nearly $2.5 billion, in line with estimates. This is as Hong Kong and China business grew quickly. Garth Jones is the group CFO at AIA and joining us now from Hong Kong. So, Garth, I was just looking at these, numbers, right? The big jump when it comes to new business value in the first half to record levels. You must be pretty pleased with this.
No, it was an excellent performance in the first half, Heidi, and we're extremely pleased with the results across not only the value of new business, which you mentioned, but also our other key operating metrics were also up by double digits, our operating profit after tax and our underlying free surplus generation. As you said, we had a tremendous performance across the group with 36% growth in our China business, 26% growth in our Hong Kong business, 16% growth in our Thailand business, 27% growth in our Singapore business, and 14% growth in our Malaysia business. So very broad-based, and that's given us the confidence to issue the targets we issued today.
How much have you seen the impact of slumping property markets, slumping bank yields, as well as the stock market volatility in China kind of encourage mainland investors and customers more towards insurance?
What we've seen is that there are high levels of private savings that are built up in our customer base. Our target customers are the middle class and affluent segment, and particularly in China, where we focus on the major cities, the wealthy cities in China, the tier 1 cities. We have a highly professional agency force, a full-time agency force, and that sells products and services to that resilient customer base. And that goes for the whole region, in fact. Our resilient customer base is middle class and affluent. They have ongoing protection needs. They have high levels of private savings. There's relatively low levels of social provision and relatively low levels of insurance provision as well. So with all that, we see a tremendous growth opportunities across the region. And as I say, that gives us great confidence and reinforces our conviction that we can continue to grow our new business well into the future.
The mainland visitors business was perhaps a little bit slower than local business, the local component. What's your outlook when it comes to the second half and sort of going into next year?
The mainland Chinese visitor business is an important segment for our Hong Kong business. It makes up about half of the value of new business. What was really encouraging, we saw very strong growth, 24% growth in the mainland Chinese visitor segment, but we also saw 28% growth in the domestic segment. So our Hong Kong business growing 26% overall, we thought was a tremendous result. We continue to see strong demand from the mainland Chinese visitor segment. And to that demand, we've continued to grow our agency force in Hong Kong. New recruits were up by 19% in Hong Kong. And right across the group, in fact, we've added a high number of agents. Our new recruits were up 22% right across the group. That will power future growth into the future.
What are you expecting in terms of China margin growth going forward? And are there any updates when it comes to expansion into other provinces?
We continue to see good margins in our China business, and particularly some of the discipline that came into the bank assurance in particular. We have a highly selective approach to bank assurance, and we saw the margins there increase significantly. We also have high margins in our agency business, as our focus is on protection and long-term savings. And with that, you saw the growth, 36% that we mentioned earlier. In terms of the geographic expansion, that remains on track. We opened another 3 wealthy cities in China during the first half. And we continue to look to grow 1 or 2 provinces a year going forward.
I wanted to ask about Singapore as well. The momentum seems really strong, particularly when it comes to wealth management, that tailwind there. What do you see as the major drivers behind that? Is there further momentum to come? And I guess, how do you compare that with the Hong Kong business?
Yeah, there are high levels of savings in Singapore, and Singapore, as you know, is an international hub. What we see is that there is this demand for long-term savings, and a product we launched in the first half targeted at that market was particularly successful. We have a very professional agency force in Singapore. Around a quarter of the agency force are what's called MDRT, Million Dollar Round Table. That's the gold standard for agency. In fact, AIA was #1 for MDRT globally this year and for the past 10 years. That's unprecedented. But going back to Singapore, we see that there's strong growth there, 27% growth in value of new business. Our agency business grew by 31%. We see good momentum there, and we see that momentum going forward. We're very optimistic about the prospects for the Singapore market, as all our markets.
Are there any sort of strategic updates when it comes to agent recruitment and the broader product mix?
We continue to focus on protection and long-term savings. Clearly, there's a great demand for savings at present, particularly with interest rates being high. But as interest rates move, then we see a balance moving towards perhaps more protection over time. The key thing is that we have professional agencies. We grew, as I said, our agency by 22% across the group in the first half. And that gives us a strong momentum that underpins our target of 9 to 11% operating profit after tax growth from 2023 to 26. That, I think, is a reflection of our conviction that we can continue to grow going forward. The agency force is over 70% of our value of new business. We're very confident that our agency force can continue to grow, continue to be very professional, continue to meet the needs of our customers.
Buybacks and dividends, can you expect that to continue to be supported?
You saw today that we announced a 5% increase in the interim dividend, a further increase along with our sustainable, progressive and prudent policy. I think it's important to go back to our announcement in April, where we announced our capital management policy, our new capital management policy, that reflects just not only the dividends, but how we'll return money to shareholders through regular buybacks and so on. In the first half, we returned $3.4 billion to shareholders. We've got another $3.1 billion of the $12 billion share buyback program to go. And in fact, over the last 2.5 years, we've returned $15 billion to shareholders. So you can see not only are we growing, we're also able to translate that growth into earnings growth and into cash growth and returns to shareholders.
Do you expect that operating profit will get back to double-digit increases in the second half, so more in line with pre-COVID performance? And does that, I guess, help allay the fear that perhaps investors have between new business value and profit growth? Is that sort of what's been behind the retreat in share prices?
Well, what we've seen today is a tremendous set of results for the first half. Those tremendous results and the momentum we have in the business, the way we are meeting the real needs of customers. We grew our new customers, were about over 1 million extra new customers in the first half. That means we have tremendous confidence and conviction into the future. And with that, as I just mentioned, we issued a target of 9 to 11% operating profit after tax growth per share from 2023 to 26. You saw that we grew by 10% in the first half, and we're confident that we can continue to grow into the future.
Garth, always great to chat with you, and congratulations on this set of numbers. Garth Jones, who's a Group CFO at AIA. More ahead on the Asia trade. This is Bloomberg. Some of the other stories we're following this hour. Chinese Premier Li Qiang has told Russian President Vladimir Putin that good relations between their countries benefit the region and the world. Li met with Putin in Moscow, and Beijing says he really stressed willingness to explore cooperation opportunities in emerging fields of science and industry. China has become Russia's main trading partner after the 2022 invasion of Ukraine. China is launching an anti-subsidy investigation into dairy imports from the European Union. This is just the latest in a tit-for-tat trade dispute. The investigation will target several products, including fresh and processed cheese. EU dairy exports to China last year were valued at $1.9 billion. Up next, we'll be speaking exclusively with Xiaomi's group's vice president and CFO as the Chinese smartphone maker reports its fastest growth since 2021. This is Bloomberg. Take a look at how we're setting up. Heading into the Asian session, we're expected to get that lift, the rally to continue on the back of the gains on Wall Street, really on the back of these Fed dovish minutes, perhaps more dovish than we were expecting given the tone of the press conference, but really priming for gains and also priming for the start of rate cuts from September now as well, given that we also had that significant revision to payrolls data. Sydney futures looking pretty perky, about 0.4% high there. Singapore Nikkei futures are a little bit more receded there, but still looking like we'll see some positivity along with gains in Hong Kong futures as well. Well, when we get to the start of trading in Greater China, watching some of these tech names with earnings still coming through. Xiaomi reporting its fastest pace of revenue growth since 2021. Sales rising a better than projected $12.5 billion for the second quarter. It comes as the firm saw initial success from its first EVs and a global smartphone market bounce back. Let's get over to Hong Kong. Our tech reporter Annabelle Jewellers is standing by with Xiaomi's CFO.
Yeah, that's right, Heidi. Joining us exclusively is Alain Lam. He's Vice President and CFO at Xiaomi. And Alain, I think by anyone's metrics, these were really solid results for the second quarter. But what stood out to you in particular?
Yeah, thanks, Annabelle. Thanks for having us on this. I think that if you look at our results for the last quarter, what's very impressive to ourselves is that we have been able to grow our revenue by more than 30% year over year. And this is the 4th consecutive quarter which achieved year-over-year growth. I mean, obviously, we start delivering our EV for the first quarter ever, and that brings us an additional revenue stream. But even if you take that EV revenue off, we're still growing our core business by more than 20% year over year. And I think that really shows that we have been able to, grow our business steadily despite the overall challenging economics market and markets overall.
And one of the things that's really been highlighted out of it is the gross profit margins, which again have been solid across the company. But the EV sector in particular, I think you achieved around 15.4%. Was that your expectation? And where are you expecting that to trend over the rest of the year?
Look, initially when we started this business, obviously the market has grown to be much more competitive since we started this business back in 2021. This is the first year we start delivering our cars, and our initial expectations was not as high. We were expecting around 70 to 80,000 delivery for the entire 2024. But as you can see from our call last night, we've been talking about 100,000 to 120,000 units for this year, right? And obviously, EV is still very much a scale business. If you have a bigger scale, you can amortize your fixed costs more efficiently, number one. So once you have now that we have a bigger delivering target for this year.
What is that, sorry? The new delivery target?
100,000 to 120,000.
Okay.
So that allows us to amortize our fixed costs more efficiently, number one. Number two is, and we mentioned that in our call last night as well, is the suppliers have been really, really good to us. They were able to work with us and offer us the best prices that is available in the market, despite our scale was not as big as many of our peers. So that also helped us in terms of lowering our BOM cost. I think number three is also that when you look at our EV, you can see that we offered a lot of different fun stuff, right? We have different colors, we have different accessories that you can buy, and that obviously help us enhance our margins overall.
When you talk about scaling the EV business, obviously it means a greater investment as well in factories or production facilities. Where are you looking to build those?
Well, I think we started our factory, our first factory in Beijing right now. That has an annual capacity of, call it, 200,000 units. We're obviously trying to scale that up and become more efficient. So if you look at our plans, we started double shift beginning of June, and then we have to make some changes to our productions during the course of July that help us enhance the production capacity further. So if you look at our delivery right now, we are over 10,000 vehicles that we delivered per month in June and in July, most likely in August as well. So we've been able to scale our production facility as well as our delivery capabilities.
And something else that was mentioned in the earnings call was this goal for global expansion. So what's the timeline around that, do you think?
Right now, we don't have a concrete plan at this point. I think we are very much focused on the large opportunities in China right now, right? As you can see, we have a huge backlog of orders that we need to fulfill at this point. At the same time, the stated goal for our EV business is to become top 5 globally in 10 to 15 years' time. In 15 to 20 years' time. So we do have the global expansion in mind, although right now we're still trying to fulfill all the demand that, from the customers in China at this point. And once we have more concrete plan, we'll definitely tell the market about our plans.
I do need to ask, though, how you're factoring in the risk of tariffs, particularly in the EU, because we've seen these levies. They do seem like they're on the way. And if you don't have that manufacturing presence in Europe, it seems like you could attract an extra duty on your vehicles. Are you looking to establish in Europe?
Not at this point. Again, I think when we decide to go global, we'll look at each market very carefully in terms of what we need to do to satisfy the demand from the regulators as well as the customers in those markets. So right now, we aren't looking to set up new production facilities overseas. But if and when we decided to go global, I think we need to look at the market dynamics in each market before we decide to make those investments.
What about the product range? Because there is a lot of hype around this and a lot of anticipation for what kind of product. We've spoken with different analysts, and some people will say that really the only growth area for EVs right now in China is the extended range electric vehicles that can travel up to 1,000 kilometres or 600 miles on a single charge. Is this a category that you're considering?
Well, look, I'm not here to talk about our future products at this point. You see that we have one SKU so far, but we have 3 variants of that SKU, mainly the standard version for SU7, the Pro version, and the Max version. In a couple of months ago, our chairman also showcased an even powerful version of our SU7, which is the Ultra version, which we're looking to mass produce that next year. But in terms of the future product range, we won't talk about it until we unveil those. But it's fair to say that even for that pure electric sedans that we have launched, if you can see some numbers, we are probably, in July, we're probably the best-selling pure electric sedans in China already. So we still see some potentials in this market. Of course, people have different views, and you need to cover the different product range as well. But that's not what we are prepared to talk about at this point in time.
Okay, let's talk about something you might want to talk about, and that's smartphone sales, because you've managed to grow your market share overseas and also in China. But it has, of course, been a very competitive environment, and that did put some pressure on your margins.
Right. Well, look, this is the 16th consecutive quarter whereby we're number 3 globally. We have a 14.5 to 15% market share for this quarter. That put us even closer to number 2 and extended our gap with the number 4 players. So we are inching closer. We've been able to increase our market share this year despite the very competitive market, as you mentioned. If you look at our shipment for the first half of this year, we have, increased our shipment by more than 19 million units from last year. So we've been able to gain market share despite an overall relatively flattish market. But obviously, as we extend our offerings, as we extend the reach into places like Africa, Latin America, Middle East, that will put some pressure on our ASP. And because we need to be more competitive, we became number 2 in Latin America for the first time ever in our history. We have been number 2 in the Middle East for the last couple of quarters, and this quarter we managed to get our market share in Southeast Asia to number 2. So what we've been able to do is to extend our market share. Obviously, that increased competitions will, we have to make some sacrifices with our gross margin, plus the fact that the component cost in the market has been growing up.
We just were showing some footage of the mixed flip phone. Talk to us about that and how it fits into the premiumization strategy that you're following in China. How successful have you been at luring shoppers away from Apple?
Well, look, if you look at the first EV we launched, we believe that close to 50% of the drivers right now are female, which is a demographics that historically Xiaomi have not been able to target. The flip phone is also an extension of that. If you look at the number of users using that flip phone, over 60% of the users are female, based on our numbers. So that has made a successful inroad for us into a demographics that Xiaomi historically haven't been able to reach out or target. And that helped us extend our, increase our market range, extend our user base.
What would be your plan, because in the earnings call, again, it was mentioned that Xiaomi thinks it can do better in that 10,000 plus RMB range for its phones. So what's the approach here? I
think we're still quite early, right? I think the flip phone is the first one that is the first model in this category that we launched ever. I think, as we mentioned last night as well, I think we have made very successful inroads in the 3,000 to 6,000 range. This year, with the successful launch of our Ultra product as well as our Flip product, we have been able to extend that even to the 6,000 plus range. The 10,000 plus range is what we need to do much better, right? We started offering this new foldable phone. This is the fourth foldable phone that we've launched in our history, and that has been receiving a good reception. But we need to do a lot more work on that front. I think also the international strategy. The Flip phone is the first foldable phone that we offered outside of China. So you can see that in Hong Kong. You can see that, and it's been selling and selling well, and people like it.
I do need to ask about cash pile, because your reserves have been growing. I think they're up nearly 25% on the year. How does that influence your thinking around your share buyback program, and would you be looking to increase that at all?
Well, look, we had around 140 billion of cash in RMB terms on our balance sheet as of the end of June. We've been quite active in buying back shares in the market. This year, in the first half of this year, we've bought back 3.7 billion Hong Kong dollars in terms of stock in the market, which is more than what we did for the entire 2023. The board has given us authorizations to buy back 10 billion Hong Kong dollars in stocks every year, and we'll be looking for the right market opportunity to execute those buyback. But at the same time, I think that EV, and other new initiatives, we see a lot of potentials for investing in those areas. So hopefully, we balance the whole, return on investments for those cash.
All right, Alan, thanks so much for your time this morning. That was Alain Lam there, Vice President and CFO at Xiaomi. And Haidi, of course, some quite strong second quarter results from Xiaomi. The first time we've seen them as well, including EV sales.
And our jewelers there in Hong Kong. Well, still ahead, we will be taking a closer look at the BOK's upcoming rate decision with the Woori Finance Research Institute. And here why they're expecting a dovish hold today. This is Bloomberg. Take a look at what we're watching when it comes to currencies. It is continuing to be that dollar story. This, as we've seen, the dollar index, not the Bloomberg gauge, the ICE index falling so much and so quickly that the momentum gauge is now what we saw sort of at pandemic lows. That 14-day RSI for the dollar index dropping to the lowest since 2020. We've seen the euro at that one-year high, the pound at that one-year high, and of course, on the other side of that pairing, we're watching for any steeper moves when it comes to dollar yen as well. The won is also in focus, of course, today. The Bank of Korea widely expected to hold rates at today's meeting amid worries about what we see really as a resurgence in household debt and that slide in the currency. Let's get back to Seoul. Shery is standing by with our next guest. Shery.
Haidi, joining us now is Kwon Young-sun, Chief Economist and Head of Research at Woori Finance Research Institute. Young-sun, it's really great to have you with us here outside of the BOK. The expectation for you also for a hold,
yes.
But you're thinking it could be a bit more dovish?
Yeah, sure, because I think the BOK's bigger concern is the weaker domestic economy. For example, retail sales in South Korea, construction for 4 straight months through the March to June. And then we also have a very weaker number of the business investment and construction investment. Obviously, the household debt property market is a big concern for the BOK, but the government already announced some measures to address that kind of problem.
Yeah, I mean, we were thinking that potentially it could be a cut just at this meeting, but then everybody seems to have delayed their expectations because of that household debt issue. Also, real estate prices, always a perennial issue. What's going on?
Well, actually, the concern about the property market is we think that this is not a nationwide phenomenon. The situation is that the house price gain is only in a Seoul metro area, but the local area, the house price continues coming down. So what's happening in South Korea? I think that's the bigger concern for the property market in Seoul metro area is undersupply of the new housing. So the government actually they announced that they're going to increase the housing supply in the Seoul metro area. So I believe that will help the BOK to give more room to the monetary easing.
Yeah, that's interesting, right? Because Korea is not just Seoul. So if you look at rural areas, we could see more downside pressure on the economy, which is why you're thinking it could be more dovish and we could get that cut in October?
Well, yeah, October is pretty much, to me, it's pretty much a done deal, but I wouldn't be surprised the BOK cut rates this morning.
Oh.
Right. This is mainly because, number one, the BOK's three concerns: the household debt, property market, and a dollar Korea. The housing market, as I said, right, the government already announced the increased plan for the supply. Number two, the household debt, the financial regulators yesterday, they announced the tighter measures on that. Finally, dollar Korea, as you know, right, the FOMC, the September rate cut is pretty much a done deal. And we see some down revision is a non-farm payroll in the U.S. And then tomorrow we'll have a Jackson Hole, the Powers Command. All things together, I wouldn't be surprised because it's, if the environment is very favorable for the BOK rate cut anytime soon.
At least it seems that right now they're having a little bit of breathing space because the Korean won has strengthened a little bit, right?
Exactly right. Because in South Korea, we have a very strong export. Actually, they outperformed in the region. And also that we have a net external asset in South Korea. That means the South Korea is in a good the to get a benefit from the global weaker U.S. dollar. So if the Fed cut rates in October, it's pretty much done deal. Then if the the U.S. dollar is softer, then there is a very perfect condition for the strong Korea won in the down the road.
What's interesting with trying to assess where the BOK goes from here is that we were looking at the 3-month forward guidance with 2 board members now expecting a 25 basis point cut, for example, in the next 3 months. But how important is forward guidance in this country?
Actually, forward guidance of BOK is very different from the U.S. Fed, the forward guidance, because only 3 months the horizon, right? So in the BOK forward guidance, pretty much like each individual MPC members, they're on some kind of a stance for often the rate cut or often for rate hike, something like that. But again, the important for the BOK meeting is the official statement. That official statement is made by the MPC members. They're on the consensus. The official statement, the last meeting, the clearly said that, the rate cut is only matter of timing.
What's really interesting as well is that here in South Korea, despite the fact that, for example, say since 2010, we got, let's say in the 12 policy meetings where there was a rate cut in about 5 of them, there was no dissent. Okay. So even though if we get another unanimous decision to hold, it could still mean that they could cut in the next meeting.
Sure, definitely, right? So that's why I think the more important thing for the BOK meeting is the official statement. It's not the forward guidance in the BOK. And then I think that the market we're focusing on now is when the rate cut, but eventually they were focusing on how much the BOK will cut in this cycle.
The more policy-sensitive 3-year yield has just declined significantly right now. We're pricing in, 2 rate cuts for this year? What's the likelihood of a surprise in market volatility?
Well, yes, it's now the market pricing at least a 2 rate cut by the end of this year when you're looking at the 3-year, the Korea government bond yield. But I think that eventually the question is what would be the terminal rate of the BOK in this cutting cycle? But I believe the BOK will likely cut interest rate like 100 basis point rate cut through next year. That means the terminal rate would be the 2.5%. But don't forget, in South Korea, most of the household debt and corporate loans are floating rate basis. So the impact of the monetary policy on the domestic economy in South Korea is much bigger than the U.S., given the same size of the rate cut.
Kwon Young-sun, really great to have you with us here outside of the BOK, Haidi, waiting for that rate decision. Kwon Young-sun, Chief Economist and Head of Research at Woori Finance Research Institute, will be here throughout the morning waiting for that rate decision that could come in about 1 hour. This is Bloomberg.
Hong Kong exchange operator HKEX has reported a 9% jump in profit in its first full quarter under the new CEO Bonnie Chan. Speaking to us after those results, Chan says mainland Chinese investors are turning to Hong Kong to diversify their portfolios beyond domestic holdings.
I think, it's the normal ebb and flow of the market, right? So it's a good thing that we see volume really picking up in the months of April and May. And the recent 2 months, maybe you see a little bit of softness. It's simply a reflection of, I think, a few things, right? The general market environment, macroeconomic conditions.
Chinese economy is not doing well.
I think, okay, investors are worried about a lot of things these days, right?
And the flow of information out of China as well.
Election. But I always say we invest in the market for the long term, right? Yeah. So I still sort of pin my statement about being cautiously optimistic on the fact that we're sitting on very strong fundamentals, long-term promise, and we're talking about, and I've mentioned it to you before, the phenomena that the world is so underinvested in mainland China, and vice versa. Mainland Chinese investors are looking for opportunities to divest their investments overseas.
That's why southbound was up about 47%, wasn't it, from China into Hong Kong stocks?
Southbound has been very, very strong this year. In fact, it's gone up in the first half compared to last year, second half, over 20%. So we are seeing that kind of interest from investors coming down from the mainland to diversify their investments. And I think we are sitting in a very good position in terms of capturing that as the super connector.
That was the HKEX CEO Bonnie Chan there speaking with our Chief North Asia correspondent Stephen Engel. We do have the market opens in Sydney, Seoul and Tokyo next as investors really reprice these expectations for a September rate cut from the Fed. Those dovish minutes of the last meeting certainly would be pointed in that direction, as well as a significant downward revision in those payrolls numbers as well. We're expecting Asian equity markets to get that boost, really carrying on the rally from the overnight session on Wall Street. Futures are all up going into the open. This is Bloomberg. This is the Asia Trade. We're counting down to Asia's major market opens as we're expecting to see this equity rally from Wall Street continue into the Asian session, really driven by these Fed easing expectations, the more dovish than expected Fed meeting minutes, as well as the downward revision, also significant of those payrolls numbers. And Shery, it is Bank of Korea decision day. I would say, though, when it comes to Korean bond bulls, maybe they're even looking more to the Fed than to the BOK because they're not expected to move today.
Not expected to move right now. We're expecting a hold at 3.5% for the 13th consecutive meeting. Of course, real estate prices have been a concern, not to mention really leveraged household debt. But we had a guest earlier in the day signaling that potentially we could see more dovishness coming from the Bank of Korea. You said it, they have potentially more leeway given what's happening with the Fed and a potential rate cut there in September.
Yeah, a crucial decision, particularly as Shery will be watching for the potential for any dissenters on that committee. But in the meantime, let's get you straight to the market open as we see really that positivity being carried through from Wall Street. That September Fed cut is now really being seen as, well, pretty much a done deal, right? Several seeing the case for cutting rates in July, if you take a look at those Fed minutes, and the payrolls number being marked down by the most since 2009, the preliminary data as well. So we are seeing a pretty steady open then, the Nikkei 225 seeing just a little bit of upside. The costs be up by 0.4%. As I mentioned earlier, some of those bulls when it comes to South Korea looking to the Fed's rate cuts to give South Korean equities a bigger boost over their emerging market peers. And Shery, it is really down to the sort of signalling that we might get from the Bank of Korea today.
Yeah, we are watching the 3-month forward guidance when it comes to the rate outlook. We saw more board members, 2 out of the 7 board members, signal a 25 basis point rate cut in the next meeting, which would be today. But the expectations changed, Heidi, given that, of course, we had faster than expected inflation for the month of July, not to mention real estate prices, home prices just heating up. But at the same time, it's not the same picture, uniform picture around the country. When it comes to the rural areas, we could see more downside pressure on growth. Retail sales contracting for a 4th consecutive month. The latest data point showing that there is potential weakness in the economy. So right now, Bloomberg Economics expecting that rate cut to come in October.
And Shery, of course, a lot of focus when it comes to the Korean won as well, because broadly, of course, some weakness in that currency could benefit Korean equities as well. We haven't really seen that particularly. This could maybe not be the session that we see that either, given the lows that we've seen in the US dollar, right, propelling really a lot of gains in major currencies, the likes of the euro in particular, and the pound to the highest in about a year. But it is all down to central banks. Let's bring in Junbei Liu, who's a portfolio manager at Tribeca Investment Partners. So, Junbei, we're watching the BOK, but of course, perhaps more meaningfully, regionally, really the Fed. Do you think it's pretty much written in stone at this point that September will be go?
Absolutely. And but I think that at the moment, the challenge for the market is that there is still some probability or some market participant expecting a 50 basis point cut. Now, our view is it will be closer to 25. So, so I think the market still have to price out, that probability, but the cut is firmly in place.
Yeah, and this is sort of the question of the day that we're looking at as well, right? What happens if the cut is too small? Is that the nuance that we're looking at? And do we expect to see sort of disappointment? Because this is a market that's gotten really ahead of the narrative when it comes to expectations of the scale of Fed easing.
That's right. Yeah, that's a challenge with the market at the moment. We know the cuts are coming, but the market is getting ahead of itself. So I do think that this upcoming economic symposium at Jackson Hole is going to be a venue where Fed will use that to tone down the expectations to really get it to that 25 basis point. And I do think, once the market becomes a bit more realistic about the 25 basis point cut, it certainly is paves the way for a much stronger performance from there on.
What assets might be at risk if there is disappointment or a surprise? Is it sort of purely an equity story, or could we see a big move in the dollar as well?
Look, I don't think it's significant enough. There will be disappointment in equity, given the equity market has done really incredibly well. There might be some disappointment in the dollar, but I don't think it will be significant enough, because net we are on the way down.
Yeah, so we're at the point where a lot of these markets have really recovered from the nasty sell-off, but there does seem to be kind of an underlying notion of jitters still in the mindset, right?
Yeah, absolutely.
How big is the risk of volatility, particularly if we get more than expected upside in the yen, for example?
Absolutely. Look, I do think that volatility will be here to stay, particularly market keep getting ahead of itself. But taking a step back, this is a great opportunity for stock pickers really buying this asset class or the stocks you want to buy, because we know the interest rate is going lower. We know the financial condition is now going to get looser. At the same time, the economy is reasonably resilient. Yes, it's a bit disappointing in terms of economic data, but it's still reasonably resilient. So, I think it's a great environment for investors.
What are you liking right now?
Well, I actually think you have to go cyclical in this environment. Yes, you have your growth company and the like, but because they've done very well, it does make relative valuation more compelling for the cyclical companies. Recently, we've just been through the reporting season. We actually saw quite a lot of, for example, cyclical companies like building material businesses being sold off because the earnings disappointing, because the current environment of the high interest rate impacting the consumer. But I think this is a great opportunity to be buying more of those cyclicals because of the rate cut is not very far away.
It's been a big week for China tech. Really mixed, right? Xiaomi was really quite impressive. A lot of downside on the consumer when you take a look at, Baba, JD, and the outlook there, right? Are you liking anything in China at the moment?
Look, we still like China, but it certainly seems like the recovery is taking much longer to come through. Or the stimulus is certainly not working to trying to stimulate the confidence, essentially bring back the confidence. We do think the corporates and the consumer has a good balance sheet to be able to spend and to increase activity, but just they're not confident. That can change very quickly should things get better. We continue to like the services and consumer oriented, but it just takes a little bit longer to come through.
Yeah, we had a great conversation about why is China as a market, as an economy, so prone to both overcapacity and market speculation, right? Asset bubbles. If you take a look at, I guess, a longer structural slowdown that maybe China is in for, are there sectors that you think over a longer term period will still perform well?
Look, I think for China as a market itself, taking a step back, it's still a very large market with a lot of consumer, and it is still a market where consumer is getting into that middle class, a huge amount of people getting into middle class, and even if you look at the how many babies will be born, although it structurally may be challenged, but still it's 7 to 8 million babies to be born every year. It's a huge market. So I think structurally there's still a lot of opportunities in the Chinese market. The challenge is that you've got to pick your entry point with the Chinese market and be very pragmatic about the return. Once you generate the return, you probably need to take some off the table. It is a high risk market.
Do you see anything compelling for Australia?
Oh, absolutely. Here in Australian market, we actually have been quite defensive, and our growth company are doing quite well at the moment. Some of the healthcare is recovering from the high labour costs and the like, but they are doing better this year as well. But we like the consumer discretionary at the moment, just because yes, our rate cut is much further out, but our economy is holding up much, much stronger, and some of our consumer companies are trading on a very high valuation.
We're still in the middle of DNC week, and of course, it's sort of anyone's game as we head into November. What risks are you watching out for markets, which are very good at discounting geopolitical risk?
Yeah, that's right. Well, that's the thing, right? So a market often look past those, but for the sectors that might get impacted. So obviously, when there's more unrest and the issues in Middle East and the like, we will then have more movement across the oil market and oil equities. But I think with the election, U.S. election is a big one to be watched for. At the moment, we are not seeing the policies that's significantly different or surprising to the market. So we're not seeing that as a significant driver yet of the return, but we mainly watch it as a risk.
Junbei, always great to chat with you. Junbei Liu, who's a portfolio manager at Tribeca Investment Partners. One of the stocks that we're continuing to watch in the Tokyo session is Seven & I, of course. I have really just been in the spotlight with this proposed takeover attempt by Couche-Tard of Canada. That approach of that buyout proposal. We're now getting sort of a little bit more analysis suggesting that the takeover proposal would require pre-approval by the Japanese government. That's according to Nikkei reporting and citing Japan's finance ministry. Their businesses actually include the likes of security services, a designated sensitive field that's targeted by Japan's foreign exchange law. So not just about just the convenience stores, right? So it really is sort of starting to get a little bit more complex, and we know that a number of layers of approval would be required here. But certainly still watching that 7-Eleven deal that we understand that Seven & I are considering very comprehensively. More ahead on the Asia trade. This is Bloomberg. China has launched an anti-subsidy investigation into dairy imports from the European Union. Just the latest developments in what's become a tit-for-tat trade dispute. Our China correspondent Min Min Lo has been following all of this out of Hong Kong. So, Min Min, we were talking yesterday about what we could see as a reaction from Beijing in terms of the progression of the EV moves from the European Union. So, what do we make of this sort of going after the dairy sector?
Yeah, well, we have heard rumblings of this on state media that the dairy sector could be, the agricultural sector rather, could be targeted. So I think it comes as no surprise because the dairy industry benefits from massive subsidies from the EU. The EU's largest subsidy program is the Common Agricultural Policy. It has a budget of about 60 billion euros annually. It makes up more than a third of the EU's budget. And so this is where China can make a strong case for European producers, saying that they have an unfair advantage from these subsidies from the government. Bear in mind, if you look at the trade balance between the EU and China, there are actually very few categories where the EU has a trade surplus with China, and top of that would be food and drink. So if you trace back to the start when the EU first started investigating Chinese EVs, Beijing has responded with a probe into European brandy, and then it was pork, and now it's dairy. All of these food and drink categories, that's where they could hit the EU the hardest. But if you look at the overall trade balance, though, that's overwhelmingly in China's favor, which means that any sort of tit-for-tat retaliation when it comes to these tariffs, it's likely to inflict more pain on the Chinese side than the EU side. Now, the Commerce Ministry is going to investigate about 20 subsidy programs that covers the dairy industry. The biggest exporter by far is Germany, followed by France and Netherlands. It's about $1.9 billion worth of trade last year when it comes to the export of dairies, and it makes up 9.5% of the EU's total dairy export.
We're also seeing potentially affected companies come out swinging, right? Geely Auto is one of them, the Chinese auto and EV maker that's expected to be impacted. They have cooperated with the EU probe, but saying that they will see a pretty significant impact to exports.
Yes, they're one of those that have come out to warn against the impact of these tariffs, and they're actually in a pretty strong position because they have shown very strong earnings in the first half of the year. It was up more than fivefold, but that was partly because of a one-off gain from a deemed disposal of subsidiaries. But at the same time, if you look at their revenue, it was up 47%. The vehicle deliveries was up 41%, and they're increasing their sales target this year from 1.9 million cars to 2 million cars. So they're performing very well. But at the same time, if you look at one of the parent company subsidiary, Polestar, that's an EV company, its export to Europe has been down by 42% in July when those provisional tariffs kick in. So you can already see the impact of these tariffs on those sales. And that's where Geely is warning that there will be huge impact once these tariffs kick in.
Bloomberg's China correspondent Min Min Lo with the latest. One of the other stories that we're following when it comes to China, and Chinese Premier Li Qiang has told Russian President Vladimir Putin that good relations between their countries benefit the region and the world. Li met with Putin in Moscow, and Beijing says he expressed willingness to explore cooperation opportunities in the emerging fields of science and industry. China has become Russia's main trading partner after the 2022 invasion of Ukraine. Well, U.S. Democrats are preparing to formally nominate Minnesota Governor Tim Walz for vice president on day 3 of their national convention in Chicago. Our political news director for Bloomberg TV and Radio, Jody Schneider, joins us live from the event. And Jody, when we were speaking earlier, you said that the atmosphere was really electric last night, as we heard from the Obamas. What are we expecting this evening?
Yeah, well, tonight is Tim Walz's night. He is the governor of Minnesota, who is the vice presidential nominee, and he'll really be introducing himself, Haidi, to not only people in that convention hall, where it's already fairly raucous, but to America and, frankly, to the world. A lot of people will be watching. He, of course, is the governor of Minnesota, was a congressman for several terms, but before that was a football coach and a teacher, a high school teacher, and that's probably a lot of what we'll be hearing from tonight, the folksy everyman of Tim Walz, who will probably also talk about Kamala Harris, who we will hear from tomorrow night. So last night was a bit more of the really engaging and energizing the crowd with the Obamas, real Democratic standard bearers. Tonight we'll hear from more Democratic standard bearers, though, including former President Bill Clinton, who remains quite popular in the party, and some up-and-comers, including Josh Shapiro of Pennsylvania, who was on Kamala Harris's short list for VP, but also Wes Moore of Maryland, Pete Buttigieg, who's the transportation secretary, and a former mayor who's also young and thought of as a relatively fresh face in the future of the party.
We have heard from former President Donald Trump saying that it's hard for him to talk about policy, as his allies have really been urging him to focus on, because he says the Obamas are attacking him.
That's right. President Trump, former President Trump, who has been kind of barnstorming this week, which is not typical. Usually the candidate whose party's not having the convention kind of stays home and out of the picture. But President Trump hasn't been doing that. Instead, he went to North Carolina today, where he's been 3 times in the past several weeks, to say that he wants to talk about policy, but he keeps getting attacked. He was referencing the Obamas and what they said about him last night. So this kind of continued attacks and the continued focus on how he's viewed by the party continues. But we will see tomorrow night in Kamala Harris's speech how much she attacks the former president directly. She's kind of let some others do it, clearly with the Obamas, but will she take that on, or will she focusing more on what her presidency would be like, what policy issues she would attack, and what she would bring to the middle class, how she would try to help the middle class, which she has framed as a big focus of her candidacy.
Our political news director for Bloomberg TV and Radio, Jody Schneider, they're on the ground in Chicago at the Democratic National Convention, which continues with the formal nomination expected of the vice presidential candidate Tim Walz this evening. More ahead on the Asia trade. This is Bloomberg. Well, the Hong Kong exchange operator HKEX has reported a 9% jump in profit in its first full quarter under the new CEO Bonnie Chan. Speaking to us after those results, Chan says mainland Chinese investors are turning to Hong Kong to diversify their portfolios beyond domestic holdings.
I think, it's the normal ebb and flow of the market, right? So it's a good thing that we see volume really picking up in the months of April and May. And the recent 2 months, maybe you see a little bit of softness. It's simply a reflection of, I think, a few things, right? The general market environment, macroeconomic conditions.
Chinese economy is not doing well.
I think, investors are worried about a lot of things these days, right?
And the flow of information out of China as well.
Election. But I always say we invest in the market for the long term, right?
Yeah.
So I still sort of pin my statement about being cautiously optimistic on the fact that we're sitting on very strong fundamentals, long-term promise, and we're talking about, and I've mentioned it to you before, the phenomena that the world is so underinvested in mainland China, and vice versa. Mainland Chinese investors are looking for opportunities to divest their investments overseas.
That's why southbound was up about 47%, wasn't it, from China into Hong Kong stocks?
Southbound has been very, very strong this year. In fact, it's gone up in the first half compared to last year, second half, over 20%. So we are seeing that kind of interest from investors coming down from the mainland to diversify their investments. And I think we are sitting in a very good position in terms of capturing that as the super connector.
Now, we're also hearing that perhaps Alibaba will change their listing here to a dual primary listing in the third quarter, in this current third quarter, and presumably then it could potentially be part of the Connect. Would you see that a big name like that could be a catalyst for further southbound investment, and how so?
Yeah. A conversion from a secondary listing to a dual primary listing obviously give you the benefit of being Stock Connect included, or eligible for Stock Connect included. And it is something that we do speak to a lot of our listed companies, the population which is still secondary listed, for them to consider. And any successful case of conversion, I think, will be a good example to lead others to consider for themselves. So it is, I think, something which is very unique to HKEX, the ability of Stock Connect, which no other markets can offer.
Yeah. What's the IPO appetite like right now?
Yeah, I know you're going to ask me that question.
I always ask about the pipeline. You talk about 100 applications or 107
Correct.
applications, but the size of the listings have not been as large as they were in the relevant period in 2023. I think there were 18 new IPOs in the second quarter. And you have also the 18C, the non-revenue listings as well.
Right.
So there's been activity, but it's just smaller size.
Okay, so let me give you the relevant figures. So in the first half, we've done 30 IPOs, but in the following couple of months, we've actually done really well. So year to date, we have in fact completed 43 IPOs. And just looking at the number of IPOs, we are number 4 in terms of IPO league table. Now, of course, you're going to tell me, but the deal size is so small, right? So in terms of fundraise, you're further down. It is true. And I think it's a simple reflection that business owners at the current valuation level may have second thoughts in terms of how big an IPO they want to do. However, these days, when people ask me about the IPO, I usually point them to another very exciting fact, which is not very widely reported.
What's that?
Which is the follow-on offerings, which have been conducted on our market by listed company year to date. And that goes to show the depth of our market. So what am I talking about? year to date, we've seen many companies listed on our exchange conducted follow-on offerings, and these are mega deals. I'm talking about $5 billion US. I'm talking about $2.5 billion US. And these are overnight deals, right? Quite a lot of them are a combination of convertible bonds.
Convertible bonds has been a big surge
plus,
of that.
Plus follow-on new issuance of shares.
Yeah.
And the more exciting thing, if you ask me, when I look into these deals and I spoke to the bankers involved, the participation, the BOK, is actually very broadly subscribed by not only investors in the region, but also investors from Europe and from the US. And that's telling me that if there is a quality name in the right sector and investors like them, they're going to participate. And that's exactly why in my dialogue with companies considering an IPO in Hong Kong and they're worried about the current valuation level, I tell them not to worry. The importance is to get the IPO done first. Our market is very deep, very efficient when it comes to follow-on offerings, and I think the recent slate of deals proved it.
That was the HKEX CEO Bonnie Chan there speaking with our Chief North Asia correspondent Stephen Angle. Let's take a look at how futures in Europe are opening at the moment. This is we're expecting to really see the kind of buoyancy across risk assets continuing into the European session on the back of the dovish Fed minutes and the revision in payrolls numbers, all paving the way, I should say, for expected Fed easing in September. Eurostoxx 50 futures and German DAX futures up. Of course, so much of the action has really been dollar-driven. We've seen both the euro and the pound at the highest levels in just about a year, since about July 2023. And in fact, the euro is up by about 3% on the softer dollar this month so far, as the bets on Fed rate cuts just continue to be ramped up. Also taking a look at the picture when it comes to commodities, oil is pretty flat at the moment, still pretty close to those January lows. Lackluster demand is still sort of weighing the outlook there. The economic slowdown concerns in the US that could further sap demand, given there's already weakness out of crude importer China as well. Crude has now lost almost all of its year-to-date gains. We're seeing a little bit more stability when it comes to copper, but weakness for iron ore. This is Bloomberg. Take a look at what we're watching when it comes to some further gauges of how the Japanese economy is going. Japan PMI just crossing the Bloomberg at the moment. The Jibun Bank Japan August composite come in at 53. We're also seeing that August services PMI coming in at 54. And of course, so much focus when it comes to expectations from the BOJ, given the bout of volatility we saw as a result of that unexpected move. And the BOJ's Governor Ueda will be facing some pretty intense scrutiny after that bout of market chaos. Governor Ueda expected to speak publicly for the first time since July. Markets are pretty poised to pass those remarks for a dovish or a hawkish tilt as he responds to questions from lawmakers in the lower house of parliament from 9:30 a.m. We're seeing another session expected for the upper house as well of 2.5 hours each. So plenty of time potentially to see some market volatility. Dollar yen implied overnight volatility, for example, at the highest since the height of that market chaos just 2 weeks ago. So really, you can see even as we have this recovery on a headline basis for a number of asset classes, the sort of stability after the chaotic unwinding of yen carry trades, that there is still quite a bit of caution out there. The yen rebound really potentially also threatening the growth story in Japan as well when it comes to earnings. That earnings outlook for Japan Inc. doesn't look quite so good once you get that yen currency boost taken out of the equation. But this is what we're watching when it comes to how markets are trading at the moment, as we still really get the tailwind from the rally overnight in Wall Street, as the Fed minutes are dovish as they were, as the payroll numbers revised, perhaps more than expected, really boosting this narrative for Fed September rate cut expectations. The question is, of course, the magnitude of that move and whether these markets will be disappointed when it comes to that element. The Nikkei 225 up about 0.7%. Muted gains there for the Kospi on Bank of Korea decision day.
Yeah, we're watching the Kospi right now, gaining and lagging a little bit behind other benchmarks. Haidi, of course, it's been the story for 2024, but South Korean stock bulls now looking to Fed interest rate cuts to give the country's markets a bigger boost over emerging Asian peers. Let's get more from our Asia stocks reporter Yu-Kyung Lee. So, Yu-Kyung, why are there expectations and more optimism about Korean stocks as opposed to, say, other Asian emerging market stocks if the Fed cuts rates?
Sure, Shery. So this is the Bank of Korea policy day, but a lot of Korean bulls are looking at the Fed's rate cut for the further boost to the South Korean stock market. And why are there more optimism on the Korean stocks than other Asian emerging markets? It's because of the South Korean currency, which is one of the most volatile one and which is expected to get the biggest boost from the dollar strength, if the dollar's weakness, if the Fed start on the embark on the interest rate cut. Now, the South Korean currency is one of the currencies that the foreign investors love to sell when there is the dollar strength. So when there is a respite in the dollar strength, and if the dollar starts to weaken, it's a great news for the South Korean stock market as well. Now, if you look at the currency move, South Korean won has been one of the biggest gainer in the past few days as the dollar weakens among the Asian emerging currencies, and that could be translated into the further boost to the South Korean stock market, which is heavily swayed by the foreign investors' inflows from the global funds. So the strong strengthening of the Korean currency could be translated into the further inflows from the global funds, and that could be the great news for the South Korean stock market, and that's what the Korean bulls are expecting to happen if the Fed starts on the rate cut.
But Yu-Kyung, at the same time, we know that South Korean markets are heavily weighted towards exporters as well that would benefit from a weaker Korean won, right? So when you look at that calculation and a potentially weaker U.S. dollar and a stronger Korean won, what sectors could be outperforming for the rest of the year?
Sure. So one of the optimism coming from the Korean bull is that the South Korean stock market still remain really cheap. If you look at the forward or the valuations, the Kospi is trading at less than 10 times its forward estimated earnings, and that's the level that's even cheaper than the beleaguered the CSI 300 index in China. And now, if you look at the Taiwan stock market, which is very similar to South Korea in terms of the tech-heavy exporters-oriented market, the market is trading at 17 times its price to earnings. So relative to Taiwan, South Korean stock market is really cheap. So a lot of investors are expecting that the cheap valuation could have give the further upside room to the South Korean stock market. And they're especially looking at some of the beaten down sectors or some of the beaten down stocks that haven't been gaining as much. One of the key stocks that are getting a lot of bullish bets is Samsung Electronics, which accounts for almost fifth of the stock market, and that stock has been lagging behind other Asian chip makers. So that's one area that a lot of bullish investors are pinning the hopes that with the further inflows from the foreign investors with the Fed's rate cut, that the company's stock would get more boost for the rest of the year.
What could potentially go wrong for South Korea, but also broader EM equities?
Yeah, so if the Fed, one of the biggest risks for the EM stock investors is that if the Federal Reserve does not deliver on the rate cut as expected, and that has happened in the past last year. If you think about toward the end of the year, EM stock market has been gaining a lot on expectations of the Fed starting the monetary easing, but that hasn't. When that did not happen, the EM stock market have seen a sell-off. So there is a risk of that being repeated if the Federal Reserve does not deliver on the interest rate cut, as a lot of EM investors are expecting to happen. Another risk is that if the U.S. Economy sees the recession instead of the soft landing that a lot of market investors are expecting to happen, that could be another big risk to the EM stock investors. But right now, we're seeing some of the dollar's weakness going forward. So a lot of EM investors are hoping that the coming months could be the great time for the EM investors.
Our Asia stocks reporter, Yu Kyung Lee there. We're also going to be watching China tech firms at the open, looking at those results from the likes of Xiaomi and Geely. Baidu is to report there as well. Our tech reporter, Annabelle Jewellers, joins us now for more. So let's start off with Baidu. What are we expecting there?
Yeah, well, this is sort of the bad news before the good news, because actually Baidu is looking pretty challenged here, and our Bloomberg intelligence team is just really reinforcing how much its AI prospects could perhaps be a little bit more hype than substance, because they're saying that there's a lack of top and bottom line traction. Again, AI ventures, they're likely to remain a drag on profit. Then you've got the ad sales portion as well, and that could have fallen for the first time since 2022. So overall, adjusted net income could be down 16% in the second quarter, which would be the steepest drop in more than 2 years. So that's the Baidu story. Geely, you mentioned as well, and you've already discussed with Min Lo, but just worth noting they were better than expected numbers despite that tariff risk from the EU. And then Xiaomi, of course, and this is a company we traditionally think about being in the smartphone, the home appliances space, but at the end of March, as we know, they started selling their electric vehicle lineup, and they've been very successful with that so far. And we actually saw EV sales starting to contribute to revenue in the latest numbers. This is something I spoke to the CFO, Alain Lam, about in an exclusive interview earlier. Take a listen.
Initially, when we started this business, obviously the market has grown to be much more competitive since we started this business back in 2021. This is the first year we start delivering our cars, and our initial expectations was not as high. We were expecting around 70 to 80,000 delivery for the entire 2024. But as you can see from our call last night, we've been talking about 100,000 to 120,000 units for this year, right? And obviously, EV is still very much a scale business. If you have a bigger scale, you can amortize your fixed costs more efficiently, number one. So once you have now that we have a bigger delivering target for this year.
What is that, sorry? The new delivery target?
100,000 to 120,000.
Okay.
So that allows us to amortize our fixed costs more efficiently, number one. Number two is, and we mentioned that in our call last night as well, is the suppliers have been really, really good to us. They were able to work with us and offer us the best prices that is available in the market, despite our scale was not as big as many of our peers. So that also helped us in terms of lowering our BOM cost. I think number three is also that when you look at our EV, you can see that we offered a lot of different fun stuff, right? We have different colors, we have different accessories that you can buy, and that obviously help us enhance our margins overall.
When you talk about scaling the EV business, obviously it means a greater investment as well in factories or production facilities. Where are you looking to build those?
Well, I think we started our factory, our first factory in Beijing right now. That has an annual capacity of, call it, 200,000 units. We're obviously trying to scale that up and become more efficient. So if you look at our plans, we started double shift beginning of June. And then we have to make some changes to our productions during the course of July that help us enhance the production capacity further. So if you look at our delivery right now, we are over 10,000 vehicles that we delivered per month in June and in July, most likely in August as well. So we've been able to scale our production facility as well as our delivery capabilities.
Well, we're also watching Alibaba, right? The AGM is a little bit later. What are you watching out for?
Yeah, that's right. So we've got the AGM that's going to be held virtually at 9 p.m. Hong Kong time this evening. So that's 9 a.m. if you're listening from New York, of course. But one of the key things we're going to be watching out for is the shareholder vote on shifting Alibaba's primary listing to Hong Kong. So this was a plan that was actually launched or hatched a couple of years ago. And that was a time, of course, when we saw really rising tensions between the US and China. Today, that's likely to get the go-ahead from shareholders. And the key reason for for that is that if the primary listing is shifted to Hong Kong, it would make the stock eligible to be included in the Stock Connect program, something that could really increase inflows or purchases. We're thinking around the tune of $20 billion into next year. So something that could be supportive for that stock price, which has, of course, had some challenging periods over the last few years, Heidi.
Tech reporter Annabelle Jewellers there. Some of the other stories that we're following when it comes to corporate headlines. Ford says it's making further cutbacks to its EV strategy, cancelling plans for a fully electric sports utility vehicle. The shift may cost the car maker nearly $2 billion. Ford's also further delaying a next-generation electric pickup and cutting spending on EVs to 30% from 40% of its annual capex. Paramount shares rose after the bell, with a source telling Bloomberg that Edgar Bronfman Jr. is raising his takeover bid to $6 billion. Earlier this week, he made a $4.3 billion offer for control of the entertainment conglomerate. Paramount had already accepted an offer from Skydance, but has now extended by 15 days a deadline to consider other offers. Former Morgan Stanley CEO James Gorman will lead a committee searching for a successor to the Disney CEO Bob Iger. Gorman joined the entertainment giant's board this year, and Disney knows that he also oversaw succession at Morgan Stanley. Disney is weighing both internal and external candidates to succeed Iger, whose second term as CEO runs through 2026. Bloomberg has learned that Singapore state investment company Temasek is weighing a potential exit from an Indian joint venture with French industrial firm Schneider Electric. Sources say Temasek has been discussing options, including a sale of its minority stake in the joint venture to Schneider or another party. More ahead on the Asia trade, this is Bloomberg. Take a look at what we're watching when it comes to Korean assets. Of course, the move in the won has been notable, with a number of sessions of a climb when it comes to the won. And of course, that weakness in the dollar has really been propelling a lot of strength across Asian currencies. Overnight, we saw the euro and the pound hitting one-year highs as well on the softer dollar. Kospi really pulling back now, looking pretty much flat at the moment. We could argue that equity bulls are really kind of pinning more hopes on Fed rate cuts for the South Korean equity revival, with, of course, no expectations of a significant move from the Bank of Korea today, and also watching Korean bonds as we head into closer and closer to that decision, Shery.
Yeah, joining us now is Park Seok-il, Chief Korea Economist at JPMorgan, to discuss what we can expect from the BOK. Of course, we're just a few minutes away from that policy decision. Your expectation, as is the consensus, mostly is for a hold. But what are you watching for in today's announcement?
I'm looking for the rate decision itself, but what matters is the details of the decision, including how many members are open to a rate cut within the 3 months, and also whether there will be a dissent vote or not, and also overall the governor's messages. Actually, there's conflicting messages from the policy environment, including the data, inflation, and household debt credit, etc. But I need to see how the BOK is taking balance between these conflicting issues.
We saw acceleration in inflation for the month of July. That upside surprise, how significant was that? And is it right now about the inflation trend, or is it more about just real estate prices, a perennial issue here?
Headline inflation can go up and down with some supply side shock like oil prices or the fresh farm prices. But what I do focus more on the core inflation trend, which has been stabilized around the 2% target. I think the core inflation trend will bring the headline inflation toward the 2% target by the end of this year.
When it comes to real estate prices, we have seen authorities try to curb loan mortgages. What can we expect in terms of where home prices go from here? Is it the same in Seoul as the rest of the country?
Honestly, it's hard to forecast the certain sectors as prices, but as far as I understand from the recent data, some acceleration of the prices, real estate prices, is focused on a certain sector and certain level of a property type. But what the central bank has to be worried about is whether that will be igniting another bout of financial imbalance acceleration, including the household debt. And that's the key thing to monitor going after.
the leverage here in South Korea is pretty large, isn't it? Household debt, one of the highest among developed countries. This has been an issue for a very long time as well. How bad has it gotten?
Actually, Korea in many cases is a kind of an idiosyncratic case, including the population aging, household credit growth, and etc. So it is not to say whether there is definitely the threshold for, above this threshold, it is kind of dangerous. But as you know, as you say, it is one of the highest in the developed market. So the BOK is targeting much lower as a GDP share, and I think that's where we have to go.
When it comes to the economic growth prospects of this country, though, export numbers have looked pretty robust. So why is there a sense that we have to head towards those rate cuts, at least at some point this year?
If according to the Bank of Korea, there is some diversification between the net export and the domestic demand. And the domestic demand has been sluggish. And one of the reasons is that we have a high policy rate and we have a high debt servicing burden now. So in order to resolve the kind of a diversification between the net export and the domestic demand, that may be one of the arguments. But more important thing is that the sluggish or the slower domestic demand may leading to some sustained inflation trend downwards. Now we don't worry about that as yet, but if it comes below 2% target, then maybe it will be the timing that the BOK has to decrease some amount of policy tightness toward the neutral rate.
How does South Korea's loan rate, for example, compare to that of the United States in the sense that if the BOK moves, how fast could the transmission mechanism be? Because what I understand is that when it comes to corporate loans, when it comes to household debt, a lot of it is just free-floating.
Yeah, you're right. Actually, that helped the BOK to stabilize inflation in the hike cycle.
Seok, just 1 second, because we're getting breaking news out of the Bank of Korea right now. So it's as expected, Bank of Korea leaving the key interest rate unchanged at 3.5%. That's for a 13th consecutive meeting, and already 22 of 23 economists surveyed by Bloomberg had expected that 3.5% rate hold, just as my guest right now, Seok of JPMorgan, was also expecting the base rate to remain unchanged, Haidi. But really, of course, we are still expecting to see whether there was a dissenter there, whether the growth and CPI forecasts have been changed.
That's right. And so really those elements that you mentioned, whether there was any sort of dissenting view in this, if there's a revision when it comes to inflation or growth, if Governor Rhee at some point hints that he agrees or disagrees with market expectations for an October rate cut as well. That forecast when it comes to the CPI seen at 2.5%, so slightly softer than that 2.6% expected in May. The 2025 CPI, 2.1%, that's unchanged from May as well. The GDP growth forecast being maintained at 2.1%, Shery, for 2025.
We're also going to be waiting to see whether that 3-month forward guidance, where board members stand, because we actually expected we saw one more board member in the previous meeting actually expecting a 25 basis point rate cut within the next 3 months. Seok, of course, is here with me, standing outside of the BOK. What do you make of these inflation and growth forecasts right now? Because they seem to have been revised slightly downwards for this year. GDP growth forecast for this year, 2.4% instead of 2.5% projection in May. Also a little bit of a downgrade for CPI.
I think it's a marking to the market because the second quarter GDP was a little bit of a downside. And also there is some downbeat messages or stabilization message from the global oil prices. So I think it's reflecting the data in the past. I have to see the details, but I don't think there will be definitely big changes in the outlook looking forward.
You're still expecting a rate cut later in the year. Could that be October? Could that be December? Do you have any clarity at this point?
Again, we need to see the details, including the things that you have mentioned, and I'll have to look at the holistic view. We used to believe that the rate cut should be either in October or November. It could be more likely in October than November, but if according to this meeting's details, then it can be changed at any time.
Yes, my question is also, because we don't necessarily get any guidance on the neutral rate, where do we end up from here once the easing cycle starts? How do you as an economist try to see where it goes from here?
Actually, if according to the BOK's previous guidance, the neutral rate should be somewhere in between 2 to 3. And on top of that, we need to bear in mind that the BOK is worried about the longer-term financial imbalance issue, which makes them to maintain a little bit higher than the neutral rate. So in that sense, we expect the terminal rate to be 2.75%.
Really not a lot of change when it comes to the Korean won reaction. Little change with the BOK leaving the key rate unchanged as expected. But this, of course, after we saw some appreciation in the last few days, especially since mid-August. Overall, though, the Korean won for 2024 has been pretty weak against the U.S. dollar.
Actually, it may be not from the BOK or the Korea's own idiosyncratic shock, but it's just from the global dollar trend. But as far as I understand, the Korean won has to be aligned with its own fundamental. And it's on the fundamental, what makes more important is the current account surplus cases. And we are looking for the recovery on that. So on that sense, I think there's some stability going around.
So what does that mean in terms of where financial markets could go from here? Especially, as you said, considering where the Fed is going, it seems that that September rate cut has already been priced in. It almost seems as it's been locked in.
The Fed decision itself is an important factor for the BOK's own decision, but it may not follow mechanically to the Fed decision, and it may not be directly impact the financial market mechanic way. But as far as the Fed decision and implication from that is implying for some common theme on the global growth and inflation trend, then that will affect the BOK and the financial market at the same time, I think.
Seok, it was really great to have you with us. Thank you so much for coming out on a very hot, humid day outside the Bank of Korea. And of course, we've just had that rate decision, Haidi, unchanged as expected. We'll still be watching whether or not we get the dissenter, what the forward guidance also looks like.
Yeah, that's right, Shery. And, perhaps in an indication of how in line with expectations of what we know so far is we're not seeing a huge move when it comes to the Korean won. Of course, that's had some significant sessions going into this decision, but really very, very little change when it comes to the won as the BOK leaves its policy rate unchanged. Just recapping that maintaining of the 2025 GDP forecast, the 2024 CPI seeing a little bit of softness with that forecast at 2.5% versus 2.6%. But 22 out of 23 economists surveyed expected this hold to happen. This is Bloomberg.